Today, my guest is Debbie Bloyd. Debbie is a mortgage broker specialist. She's the CEO of DLB Mortgage, Real Estate and Risk Management. And in just a minute, we're going to speak with Debbie about the current real estate market, prices, interest rates, and income, and how it compares historically. But first, a quick reminder if you like the show CREPN Radio, we would love to hear from you. You can like, you can share, and you can subscribe. And as always, we love to read our comments from our viewers and listeners. Also, if you'd like to see how attractive our guests are, be sure to check out our YouTube channel, and that's at Commercial Real Estate Pro Network. With that, I want to welcome my guest. Debbie, welcome to CREPN Radio.
Hi, thanks so much for having me.
You bet. I am looking forward to our talk today. And before we get started, if you could just take a minute and share a little bit about your background with the listeners.
Well, I have a varied background. I've been in the mortgage business, so now 22 years. And I had an insurance marriage. And when I got divorced, I kept my insurance license and placed business at another company now. So I do some PNC work as well as some long-term care work. In the mortgage business, I do work with seniors and I do reverse mortgages. Now that's an FHA product. Because I do that, I had to look at their overall infrastructure for how they were going to survive as they age. And that brings in my background of a financial advisor and insurance. A lot of times they need to reshuffle their money to be able to keep the risk from getting to their finances.
Gotcha. Well, that's kind of funny because being in insurance myself, I know that the insurance has become heavily credit rated kind of thing, and you bring up kind of people in their kind of the long view kind of thing. I'm kind of curious, how do you see? And I'm kind of jumping around here because at first I had a different train of thought here, but credit just as in general. Do you see are people are you finding there are a lot of credit worthy borrowers out there right now? Are people's credit ratings strong, or is that can you speak to that a little bit?
Well, either they're one of two directions. They're either excellent or they're really, really bad. I just denied a lady last night that finally let me pull her credit before she was going out to look for a home. She'd been talking to me for over a month, shopping interest rates, acting very educated. But what happened is when I pulled her credit, she's in the 500s. Now, she has a lot of bills, and as soon as she gets all these bills paid off, her credit score will jump. I find either I have borrowers that are super educated and have 800 credit into higher sixes and sevens and really get a good interest rate.
Gotcha. So in the split, so there's not a lot of the middle range, if I'm understanding you right. Is that?
Say again?
Are you saying there's not a whole lot of people in the middle, just the middle
No,
as far as?
there's not a lot of people in the middle. Either they've really taken good care of their credit, or something bad has happened, and they know something's bad's happened and they don't know how to make it better. I have a lot of people that go through a trauma, whether it's a divorce, medical, heart attack, stroke, something. It's taken them out of the workplace. They've let their bills go, and they don't know how to rebuild credit is the problem. So yes, they could be better, but they just haven't gotten educated.
Right. And these people that are in the poor credit, are they typically renting currently? Are they homeowners or?
Well, they're renting or they live in someone else's home. So it's either they move back home with a parent or they live in a distant relative's house that they basically rented out on the friend program. So that is a hindrance too, because no one's helping them learn to build credit. If you at least rented a big apartment complex, a lot of times they do report on credit, and that does help rebuild your credit. The problem is when something goes bad, no one knows where to go to get help to become better.
Gotcha. And the people in their credit scores, are you finding is it primarily the number of bills they have? Is it the lack of income? Is there anything you can point to that is a recognized issue?
Sure. I think most people have too many bills. They want to, they know that they're supposed to have credit cards and they're supposed to charge on them. What they don't know is that they can't max them all out all the time. So then when they get ready to buy a home, they just bought a new car, they have student loans. I just met with first time home buyers today. She has student loans and the husband, they just gotten married. He was concerned about paying his house off early. And I said, you've got student loans to pay for. That's more important than paying that down than your house. So they know just enough to make them dangerous, but they don't know who to ask. So he goes, well, my dad says that I need to pay my house off early when I get one. Well, yeah, only after you've paid off everything else, it's at a higher interest rate. They're getting a rate of 3.625. And that they're getting, it's a higher rate than it should be just because they don't want to let that cash go. I'm actually going to be paying for some of their closing costs. So they're taking a higher rate so I can give it back as a lender. They still don't know the yin and the yang of the money and how it works. And if they haven't had good training at home, which most adults don't have good training to pass on to their kids, then these kids don't know where to go to get that advice.
No, that's it's interesting and scary, I guess, as I hear that. I mean, as a real estate investor myself, and there's the need for renters, but even with
Sure.
that, you want to have people that can pay their bills, not people that are borrowing from Peter to pay Paul kind of thing, or um, have um, too many bills, kind of thing,
Student
because
loans are a big thing,
yeah.
and then a lot of people, I wrote an article the other day, and I said, they're just trying to buy more stuff to impress people that they don't know, and that's what it is. People are maxed out trying to keep up with the Joneses, and again, that's going to come to an end at some point because you just can't keep going that direction and survive. All it takes is one illness, one accident, and all that changes.
Right. So, with that, are you seeing their wages increasing at all, or is this just a matter of flat wages and leveraged uh, over what they can handle?
No, I think they're getting better wages. I think the wages are going up. They're not going up fast enough to keep up with everything they want. And, this generation, I met with a millennial couple yesterday. She is pregnant with their first child and works. He works. They both have good incomes. Probably they clear 150,000 a year. They could be buying a house. They would be your typical first-time home buyers in great shape back in the day. These kids don't want to buy a house. They can't afford the $450,000 house that they think they deserve. So therefore, they can live in a nicer apartment than they can buy a house. And they're not about to change their habits. They don't want to buy a fixer-upper. They don't take the time, nor do they have the interest to fix something up to live in. So it's like we can either buy the Ritz or we're not buying at all. And so that's why we have so many people renting now, is that they can rent nicer than they can buy.
Yeah. So let me ask you this. I know, back in the crash, there were, a lot of people that proved not to be able to, afford the homes, I guess, when the mortgages changed and all that stuff. But even now,
Sure.
just the supply of homes, um, you're located in Texas, is that right?
I'm in Texas. Yes, sir. And
Okay.
where are you at?
Oregon?
Okay, so here in Texas, we've got an influx of people coming in from California and every other state you can imagine, that are escaping higher income taxes. Companies are relocating to Texas, so we do have a lot of people coming into our area. We don't see a slowdown in building. The builders are building as fast as they can. They're not building starter homes. Essentially, the starter homes are more like townhouses or condominiums. Those starter homes start in the 300s. So you have kind of a gap of first time starter homes used to be 150,000. Those are fixer uppers now. So the starter homes are priced higher than what people you would think would start at. And I think that's part of our problem. The luxury market has slowed down a little bit here in Dallas. Anything over $1 million is going kind of slow. There's a neighborhood right beside where I live, and those homes are from $1.5 million to $1.9 million. there's 6 of them for sale that have been for sale for most of this year. So that market's not moving. The 300 to the 600 market, though, is very brisk. So if you find something that you like, you have to hop on it quick. And there's bidding wars for that. The builders are building homes and they're 6-8 months out. So if I were to go to a new home builder in the Dallas Metroplex right now, all of them are going to be about 6 to 8 months out, or you can take something they've already got on the ground. But you're waiting 6 to 8 months and you're going to continue to rent until that house gets finished. They can't go any faster. There's just not enough crews, not enough. The supply is backed up. The lumber's backed up. It's just harder to get things started.
Got it. And interest rates, you mentioned earlier, I can't remember, did you say 3.675 or is
Right.
that?
And I'm giving that family $4,000 back in closing cost. So the real rate should be around 3.25.
Wow.
3.25 is what we consider the par rate. That makes you break even. That means I'm not giving you money back as a lender, but you're not buying it down with points. And I wouldn't suggest anyone buy down points right now. The rates are so low, that's just really not necessary.
Yeah, God, I mean, 3.25, and is that a 30-year fixed?
It's 30-year fixed, very vanilla. Yeah,
Wow.
rates are amazing. So that means that I locked a 10-year loan last week for 2.99.
God, that's just incredible. I
Yeah, we
remember
never
being,
thought it would go this low again.
yeah, no, I'm just sitting there thinking, I think the first house we bought, I can remember being ecstatic. We got, I think it was 6 7/8. We just, or maybe
Right.
7 3/8.
Well, there's some people in their 70s that remember buying back in the 70s, and the rates were at 18 to 21%.
Yeah.
So, I mean, can you imagine trying to sell in any market with these kind of people paying 20% for a mortgage interest rate? They would lose their minds.
Right. But I think the flip side of that too, and I was going to ask you about how interest rates are affecting pricing. I think that, one of the things that gets lost is we can talk about rate all the time, but the converse to that is if you can afford a certain payment, I mean, that's based on your income, right? And
Right.
what's a lending standard? Is it 30%?
It's 43%. So what I do is
Okay.
I take the gross of your income and you can borrow up to 43% of that. And that has to include all your credit cards, car notes, anything that shows up on your credit report and that house. So where we get into trouble now is when people try to buy a second home or an investment property, they have to qualify. That income has to be able to qualify on a second home because you don't rent those out. You've got to make 2 house payments, taxes and insurance, plus your credit cards, car notes, and things like that. So if you're an investor, it's a little bit different formula, but you still have to have a cushion. You have to have money saved. So cash is still king right now. You've got to meet these criteria in order to buy more properties.
Right. And you said 43%. That's the debt to or is that income to
Yeah,
debt?
that's your debt to income
Ratio?
ratio.
Okay.
And that has to fit in. That 43% has to be anything that shows up on your credit report, plus the new mortgage that you're applying for, taxes and insurance, homeowners fees, mortgage insurance. So some people don't have that much as a cushion. If they drive an $800 car a month, which, some of these leases out there, super expensive, pretty cars, it's a house payment.
Right.
They can't buy as much.
Right. Right. Now, you mentioned the student loans. Do you see a lot of that with the car payments too? Is that another waiting issue
Yes.
there? So,
Yeah, a lot of people, I buy used cars, so the depreciation is already gone by the time I get it. I believe in that. A lot of people want the newest best. They want the 2020s right now, and you can get that, and you can pay top dollar, and then you drive it off the lot, and you've lost 5-6% right off the top. I don't recommend that, but I'm frugal. Not cheap. I drive a nice Lexus, but it's a couple years old. Car
no,
notes are getting very expensive.
yeah. No, I had read something here recently about kind of a wave of uh, car loans that are failing or defaulting there, and I don't know if you've seen any of that in your
I
in
have
your
not.
business or okay.
No, I haven't. But I mean, I would assume that, it looks all great. And then some people are going back to leases because they just want the prettiest car on the block, but they're not going to buy it because some of these cars are $50,000 to $80,000 now for a normal car. Trucks. Do you know how
Yeah.
much trucks are? Oh my
y-
God.
Yeah. No, I've always kind of gasped when I see that, $70,000 is not a shocker anymore. That's like the um, common
That's
price.
absolutely insane. My first house cost me $72,000.
Right. Right.
So
No,
I'm aging myself,
no, I was gonna say that's the flip side of that conversation is I feel like I've got like, I can remember
I'm getting
when.
old.
Yeah, yeah, exactly. But so as far as I mean, kind of a historical perspective, we talked a little bit about interest rates being what they were. Uh, Going forward, do you think that rates will continue? Do you have any kind of sense of that? I mean, is there any kind of a read you're getting?
Well, I know the Fed is trying to keep the rates low. I know the White House, um, they think we should be low. The Fed and the White House don't always agree. With elections coming up next year, everyone I think is fearful. They're fearful of what might happen, and they're fearful what the markets think will happen. But whether it's been a Republican or a Democrat in the White House, that really has little effect when it comes to the Fed. The Fed wants to do their own thing. They feel that keeping the interest rates low is going to keep the market going. And truly, if people want to buy homes, now is a great time to do it. You're not going to get any more incentives than you have right now. You're not going to get any more money off of these new builders than you get right now. You're never going to have better rates than you have right now. So the only thing stopping you is your fear. That's silly. Rates are going to go up. They can't go much lower. I mean, they've been historically low for a long time. So if you've been waiting for rates to get better, and I have an investor that wants to refinance 3 properties with me, and he keeps calling me every other day going, I think the rates are going to go lower, Debbie. We'll wait another day. We'll wait another day. Okay, well, it could go down 1/8 of a point, or it could jump 1/2 a point. Personally, I don't want to risk that. I just take my low rate and move on. But some of these people, 1/8 of a point is worth the gamble.
Yeah.
I think rates are going to be going up. I think as the uncertainty of the market comes next year, rates will be going up. I don't think Trump can keep the rates down and this long, much longer. And then, of course, with the new election, no telling what will happen.
Gotcha.
So I think now is a great time.
Sure. You mentioned investors refinancing. What kind of rates are you seeing for a non-owner occupied?
Well, those are in the low 4s or the high 3s. So they're only about 1/2 a point higher than the normal rate. So if I can get someone in at 3.5, right now people can refinance their investment property at 4 or less. That's insane. Really,
Yeah.
investment properties used to be around 8. So, gosh, now's a great time to buy. And in most of the lenders' rule books, they can take up to 75% of the equity of the house out. So what I'll have a lot of investors doing, and what this one investor is doing for me, is he owns 3 of them free and clear. He's going to cash out. He'll have 75% on each property cash available to go buy more. So he wants to wait until the rates are at the absolute lowest that he thinks to be able to do that, so he gets top dollar.
No, makes
And then
sense.
he'll go back out and buy 3 more properties.
Right, right. No, it's the timing. I guess it all depends. I guess on your view. If you're a short-term player, a long-term player, I think most real estate investors tend to have a longer view. So if you can,
Right, right.
kind of play that.
Depends on where you're at needing the money. If you're like people in their 40s and 50s, they're still looking to grow their money. And then at some point towards your retirement, your cash flow becomes king and you want to get that cash flow moving. So, I mean, personally, I'm buying investment properties and I'm flipping properties because I'm taking advantage of what the market has right now.
Right, right. Um, you mentioned the couple that is currently renting at a nice lifestyle, not willing to
Yeah.
give up their lifestyle. Can you speak? Are you seeing that rental rates? How do they compare to like a starter home mortgage? I mean, is it
Well, yeah, it depends on the part of town you're in and where you're at. So I'm in the North Dallas area, and rent ranges from $1,000 to $2,000, and it depends on how fancy you want. There's a high rise right down the street from my office, and those start at 2,200 and go up to 7,000. and those are
Wow.
apartments, luxury apartments. My daughter goes to TCU over in Fort Worth, and she'll be spending $1,000 a bedroom in around the university area. So yeah, it all depends on location. Is like everything else, it's location.
Gotcha. And on a starter home mortgage, what would one need to plan? I
You're
mean,
looking at payments about $1,500 to $2,000. So if you can be in an average apartment, you can get a starter home. The thing is, you have to have money to put down on that starter home. And where most people are getting, I see a lot more gift money right now. People are getting gifts from the mortgage world. We can get gifts from immediate family, brother, sister, mother, father. And so we're seeing a lot of gift money from parents, getting the kids started with a $10,000 gift that they can use with part of their down payment, help pay closing costs.
gotcha.
They just haven't saved the money themselves.
Right, right. No, I'm just I'm thinking this from a landlord perspective. If you're looking for prospective tenants, there's a screening thing. I know it's always been kind of a rent to income ratio. Kind of a
Right.
rule of three has always been kind of the rule we've always used. And uh, just it's crazy. I mean, just as high as rent has gotten, but a lot of it has to do with just there's the kind of the challenge they have with the bills, and I guess like you said, the supply based on the schedule to build out more properties.
Well,
So
this little millennial couple, they are expecting their first baby. And his idea was, I don't want a lot of debt. So he views home ownership as a big debt. She views it as an asset.
right,
So, and also, he is not, he's wanting to change jobs. He doesn't know how much longer he wants to live in the Dallas area. He might move somewhere else. And if more millennials move around a lot more than you and I probably did, and why are they going to buy something if they're only going to be there a couple years? So they're not planning very far out. Heck, my kids don't plan out till the end of the week, and they're in college. So these millennials aren't that much older. They don't make long-term plans. So they're like, if my husband doesn't like his job, he'll just move to another city or do something else. And we don't want to be tied down on in a house in this part of town and drive an hour and a half to another part of town. So we're just not going to buy anything. So they're not very concrete in their views.
yeah. No, it is interesting. I mean, the mobile society. I mean, they have kind of a recent experience with the crash, and I think there's probably some residual fear from what maybe they saw or read or learned, whether it be firsthand or just associated fear based on the crash and that, and then just that not want to be tied to a mortgage. I get that. I mean, I'm not a big fan of the yard work and all that other stuff comes with it, but kind of the yin and yang.
They're very busy, and they like to be busy, and they don't want to be tied down with stuff. So they want to be mobile, and her idea is he's not. You've heard this before, and it's kind of cliche. If I don't make a matter at my job, I want to go somewhere where I matter. And I know Simon Sinek talks about that. A lot of people talk about that on YouTube videos everywhere and speeches, how this group of individuals that are under 30, they want to make a difference. And if they feel like their job isn't making a big difference, and they're going to go find a job that they do make a difference. And they kind of have it mixed up. They're not giving it very long to be at that job to make a difference. So therefore they leave and go to the next job. And then they have to be mobile because they've got to go to the next place, and they can't be owning a home and jumping like that. So that would hinder that.
Yeah, no, you're not going to be CEO at the end of the week, I guess. So
No, you're not. It's going to take a while.
yeah, so well, great. Debbie, if we could, I'd like to shift gears here just a second. As I mentioned to you before, by day I'm an insurance broker, and we work with our clients on risk management. And
Right.
a couple of things we look at, or a couple of strategies we consider, are A, we can avoid the risk. B, can we minimize the risk? Or C, can we transfer the risk? And that's essentially what an insurance policy is.
Right.
And so recently I've been asking all of my guests if they could identify what they consider to be the biggest risk. And so if you're willing, and also just to be clear, I'm not necessarily looking for an insurance related answer. Um,
Sure.
Risk is everywhere. But if you're willing, I'd like to ask you, Debbie Bloyd, what is the biggest risk?
I think the biggest risk is that we're going to be running out of money and we're growing too old. So, what I see happening to families, either with money or without money, is they're outliving their money. People say, how much do you need to have to retire? And I said, more than you think. And they're like, well, how much is enough? I don't know. It depends on how you want to live. And so I have most of my seniors either outliving their money, and that's a huge concern for them. And they don't start worrying about that until it's too late to do anything about it. You and I both know long-term care policies. You can buy those at a young age. You can buy them middle-aged. You can buy them when you're 60. But after about 65, they become unaffordable. People are thinking too late because and I don't know how old you are. I'm 55. I feel like I'm 35. I probably look more like I'm 45, but I still mentally, I don't feel old at all. And so I think a lot of people that are baby boomers, much older than us, are in their 70s and they don't feel old at all. But what happens is things are going to start going wrong with them and they're not protected. They never thought they'd, number one, get to be this old, or number two, have anything happen to them. And they're not prepared. And it wipes out entire families.
No, I tell you, there's a lot of truth what you say there. I know having older parents, seeing just how the money works when start to live off your savings and retirement accounts and all that stuff. It's for so many years, I think you are putting money into it and you think it's a big number, but when you realize that you've got to liquidate it in order to take it, make use of it.
Sure. Sure. That's why I do a lot of reverse mortgages. And when I talk to them, I'm talking to very affluent borrowers now doing reverse mortgages because it's a way for them to use their nest egg of their house rather than start drawing that money down early on their mutual funds and IRAs and retirement plans. They use that in their house first. That keeps that money invested, making more money rather than just sitting on a paid off house. So we're learning to use money different ways. This is where my varied background comes in very handy, is trying to see all the pots that you have to pick from and pick from the pot that is not making you any income. That's just a drain on you. And so in essence, as you age, your house, if you have it paid off, it's like the golden egg. You're sitting on it. You can't access any of the money that's in it unless you take out a loan, start paying it back. A reverse is the only thing that allows you to access that money, not pay anything else into the house, and then start using that money to live on. We do lines of credit, we do big lump sums, and then you can invest that money into other things. So it's becoming a very well thought after individual planning tool for families. And I talk to a lot of financial advisors now and CPAs about using that tool to help their families.
Got it. Got it. Well, Debbie, before we wrap up, where can the listeners go if they would like to learn more or connect with you?
Well, I have a website because I do a radio show in College Station, Texas, and it's aired everywhere. That email address or that website is moneystrategieswithdebbie.com. And I also have I'm on Facebook under Debbie Bloyd and DLB Mortgage Services. So they've got me on Instagram. So I'm branching out. I'm reaching everybody now.
Got it. You got all the social media platforms. That's great.
Yeah, you got these millennials working for you. They get you everywhere.
That's great. Debbie, I've enjoyed talking with you, and I want to say thanks for taking the time. I've learned a lot, and I hope we can do it again soon.
Love to. Thank you. Have a great day.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.